Hello, I'm Professor Strafacci. Welcome to class. I just want to make sure I'm recording. Uh, Great to meet all of you. I'm sorry about all the delays with the live class. I just had some personal issues I had to take care of. Nothing, thank God, nothing serious, but things that I just had to I could not get out of. One of the things was, believe it or not, I'm 65 now. Well, you should believe it, I'm 65. But I was in finance for many years. I worked on Wall Street for many years, fund manager, hedge fund manager. I worked in investment banking. I come from New York. You can hear that. I grew up like 8 miles away from the stock exchange, so it was just kind of worked out for me. I mean, I was in law school, but I went to St. George University, which is the largest Catholic high school in the country, a Catholic high school, Catholic college in the country. And I did pretty well there, and I went back. I masters in finance when I started to work on Wall Street. And I was fortunate because I was really involved in school, president student government. I had really good grades. I had won a special medal that they gave, and it's actually right over here by my credenza. And on the day I won it, they give you when you graduate, they give you the medal, and it was called the President's Medal. And on the same day, as luck would have it, because just because I grew up 8 miles from Wall Street, and this is 1980s, not doesn't just mean you get a job on Wall Street. I mean, you know what that's like. Whether you're 8 miles or 800 miles, it's a tough place to break in. From a certain level, and it just so happened that the chairman of Dean Witter, if you ever heard of that firm, is an older firm when they merged into Sears, and then they became part of Morgan Stanley. Um, the chairman happened to be there. His sister was a nun. Mr. Melton was the guy. His sister was a nun who ran the libraries, and like what happened, he had done some good things for the school, and they gave him an honorary degree. And afterwards, when he heard, they read a citation and gave me the award. Oh, very fortunate, he offered me a job. So I dropped out of law school, went to work for him. My mother was not happy, but it's something I really wanted to do with my life, and I really enjoy it. So I love finance. I just love business, right? I grew up in a house. My dad had his own construction business. My family was very business oriented. So it just so worked out for me. So I'm really grateful about that. Um, Happily married 40 years with my wife, 44 years. 45 years. She also went to St. John's, but our families knew each other. And I have three sons. The oldest is 36, and he's got his PhD in movable bridge design, structural engineering. He's up in Boston. And my middle guy, he also is an engineer, but went back and got his MBA and his law degree at Rutgers, and he's a practicing lawyer. He also started a business while he was. We told him, listen, we'll back you to the hilt. We're all about business, but you have to get your degree. So he got his degree. He worked, and he obviously got his degree, but he passed the bar and everything else, which was not easy. And he started a brand called Syndrome, which he's building, and I'm helping him. We're helping him build, helping him. But really, his regular job right now is he works for a large international, located in New Jersey, environment contractual work. So that's what it looks like, right? That's a good fun, and he's building it. Rutgers, where I also teach, they gave him. My boys went to Rutgers. That's the state university here in New Jersey. They gave him two grants to build a firm a while back, and he's doing great with it. So and then my youngest is also now those guys were engineers and went back. My oldest got his MBA. My middle guy, he did study his MBA after his engineering degree. My little guy, he's stuck with business. He was in accounting and finance, and he is now working for the Securities and Exchange Commission, which is the federal government regulation of the securities industry. So that's a little bit about me. I understand it's a Saturday at 2:30, so I'm not going to be too long, but I do want to say that I'm glad. Again, next week we'll do this more orderly. I will make it either Thursday or Friday, and I'll give you that stuff. The code word. I mean, I want you to keep uh, watching, but the code word will make it. How about this? We'll make it a snow mitts. Snow mitts is the code word. Snow mitts. Okay, so only because I just stopped here, no particular reason. A little, just the last thing about me was when I said I grew up right there. See if I can find this. I grew up in a place in Brooklyn called Dyker Heights. I don't live far from there. I live off the Jersey Shore now, which is not, believe it or not, my whole life I've been all around. I mean, I've been all over the world between business and pleasure. But I grew up in a place called Dyker Heights, and that little green spot, which is not so little, is believe it or not, it's a golf course. It's one of the most popular golf courses because it's right in the city. It's called Dyker Beach. When my family came here in the 1800s, but both sides of my family are from Italy, Calabria, and they half of this park, which was a golf course, was their farm. And my grandfather sold it and his brother to the city in the 1920s. But my family stayed there, and and the next generation started playing golf, and so they were just took to it. And my father's first cousin, Frank Strafacci, won the 1935 U.S. Amateur. We all play. I mean, my game was basketball and soccer. I played that in school, but they're real golfers. So he won the 35 Amateur, which you don't have a lot of Italians winning the U.S. Amateur back in the 1930s. But then later, his grandson, 2020, Tyler Strafacci, he won the U.S. Amateur out of Georgia Tech. So we're pretty proud about that. We have a golf background. And the other interesting story is if you look here, there's a military installation, Fort Hamilton, right there. So Fort Hamilton, right here. Fort Hamilton sits right at the foot of the Verrazano Bridge, and that's New York Harbor, one of the main waterways in the world. And Fort Hamilton, and there's one on the other side, Fort Wadsworth. They guard the entrance. I mean, you can imagine that needs guarding, right? And Earl Woods was stationed there as a young man, and he picked up the game by playing at Dyker Beach. And he took lessons from one of our cousins, Tommy Strafacci, who was the pro back then. His brother Frank was the pro. So we find real fascinating. So a little bit more about how I got involved in finance. Right over here is a school called Zavarian High School, which is arguably the toughest, and you can look it up, the toughest Catholic high school in the city. And think about how big New York City is. And I was fortunate to A, to get in, and B, to have it that close to my house. It was like maybe a bus ride away. And so we stayed at the New York Harbor. And when you were when you were in high school, for the first 2 years, you picked a language, either Italian, French, Russian, or Spanish. And I picked Italian. Although my family had been here a long time, they didn't speak Italian in my house. And I mean, my father could speak it, but he never spoke. He was born here. So long story short, we had to take all your classes in that language and then translate it back. Just math and science, you couldn't, but everything you didn't have. And then in the last 2 years, I had electives finally, and I took economics and finance. And that's when I started reading the newspapers every day, the Wall Street Journal, New York Times to this day, and on Wall Street. So I recommend to every student I have, if you take nothing out of my classes, but that you're reading the papers every day, you've taken a lot out of my classes, a lot. So I'm going to always come back to that. I'm going to add stories throughout the class and things that I find interesting, but I beg you to start considering that. And the other good news was you had it, bad news, but for me, but each class you took, you had to pass a state exam, which if any of you come from New York, it's called a Regents exam. And so the Regents exam is a really tough exam, but once you passed them all, and you had to pass them to graduate, you automatically got a scholarship. So I got a scholarship to go to St. John's, and then later, they offered me a scholarship for my master's. And well, the guy who hired me, Dean Witter, paid for the rest of it. And so my dad, well, he would have paid for me. He didn't have to. So I did. He was, I did want to go to Georgetown, but I really just, because I don't know, and my father's like, you don't even know where that is. But we had family in Washington. But my father said, made a deal with me. He says, go to St. John's for 2 years. And if you really want to go to Georgetown, let me know and we'll take care of it. But after 2 years, I met my wife and I loved it there, obviously. And there's Wall Street right there. There it is, stock exchange, which today is mostly a computer model. But you could just, where I live is not far. I live now I mean, like I said, I've done a lot of traveling all over the place, but for business and pleasure. But I live right around here, and so it's just a boat ride up to Wall Street. And so I went back for my doctorate at Pace University. And I did that in about 5 years ago, and I took all my classes. And so the stock exchange is right around here, and I took all my and Pace is right here. And I took all my classes. I passed my comprehensive exams, which this is a great pizzeria, by the way. I passed all my really great. If you're in the New York area, I mean, it's a great area to be. We got the 9/11 exhibit because that's pretty somber, but there's a lot of stuff going on there. And anyway, and if just drop me a line if you want, and I'll give you a guide to the best places. But at any rate, I went to Pace, which is right here, and I passed my comprehensive exams, which are 6-hour exams, heavy math, proofs, a lot of other stuff. People fail it. There's Pace. People fail it, but thank God I passed it. It's not like, and then you got to start all over. I mean, it's great. You got to pick another major, which I did not want to do. And now I had a meeting this morning on my dissertation. That's why I had to move everything around. And I'm almost done with my dissertation. So enough about me, but I just want to share that with you. So a little bit about what we have to do in this class is let's just go over some of the stuff. The first discussion, and I see some of you have already contributed, which is how is your employer set up? Is it a for 2 to 400 words on whether it's a sole proprietorship, a corporation? This is basically how you set up companies, right? And I like the responses so far. You've done a good job with that. So I'm going to add as much information as possible to help you. But let's take a look at the types of business ownership. So there are different types of ownership, right? Um, right? Hold on a minute. And this is all just tutoring for writing the paper. I'm not a tough grader. I'm not gonna lie to you. I mean, that doesn't mean I don't care. It just means I want to make sure that, at the end of the day, I don't want to stress people, but on the other hand, I want to make sure that you learn as much as possible. I'm very pro student. What does that mean? That means I know you're an adult learner. I know how tough it is to go back to school. I know that you have a lot of you either in the military, God bless you, or have my dad was Navy, or had family, or all that other good stuff. So I'm sensitive to that, and I want to make sure that I don't stress you. I make your life as easy as possible, but you just got to work with me. Just do what you need to do, and I'm going to give you as much help as possible. So sole proprietorship is the one you see most often. A sole proprietorship is basically you own the firm, you just open it up, and whatever you make or lose goes right into your W-2, almost like, an extension of your own self. It's the most popular because it's the single owner. Many people just elect to do it that way, your local hair salon, a pizzeria. I'm assuming, you got pizzerias that are in LLCs. You might have Domino's, which is a corporation, but basically it's the most popular. Problem with the sole proprietorship. Let me see if I could. There's not a lot here. Let me just do this. Um, I know that. Let's take a look here. Yeah, I want to get one from. There we go. CFI is always a great reference, by the way. It's always a great reference. So it's unincorporated, it's owned by one individual. So just keep that in mind. Whenever you can get anything from Corporate Finance Institute, it's the gold standard. I mean, you can go there and get certified. It's not easy. It's a great thing to have, just so you know. Sole proprietorship is an unincorporated company. It's owned by one individual. While it's the most simple type of business, it offers the least amount of financial and legal protection. You have the same liability. This is the problem with sole proprietorship. Somebody slips and falls. I mean, it's in your business, but they can kind of reach into you. So I don't like having this. I would not recommend it. I think that every person who considers doing anything on the side should have an LLC. It's not expensive. At the most, $500. You could set it up in your state. If you go searching right now, there'll be a million hits that'll come up, how to set up an LLC. But absolutely do not do business privately without protecting yourself and putting it in an LLC. Because now remember one thing, let me caution you. I'm not an attorney, but my son's an attorney and I know tons of attorneys. If you do something bad or illegal, and that's not protected. So, that nothing protects you from that. I mean, that's just bad acting. But if somebody slips and falls, God forbid, or there's an accident, or and it's not through negligence or anything else, you're protected, and it's in the LLC. So that's the first one. Okay, but it will allow one person to retain full control. It's easy, it's inexpensive. Um, there's tax benefits as your income is considered the owner's personal income, and it's only taxed once. So that is a benefit, right? That is a benefit. So you only get taxed once. It's not like an LLC where there may be taxes in the LLC and then it goes into your K1, which goes right into your W-2. That will happen. So I have to caution you, you pay more, but the protection is priceless if you have a problem. It's one of those things, like some people don't believe in insurance. This, for me, is a form of insurance. So just make sure that in the sole proprietorship, you know that the upside and the downside. Then you have a partnership, and partnerships are generally the way I like to go. Like sole proprietorships, they're able to take advantage of flow-through taxation. That means the income is treated as the owner's income, so it's only taxed once. Owners and partnerships are responsible for the liabilities of the firm. However, there's some nuances to this. There are different types of partnerships. So in a general partnership, it's the easiest type of partnership to form. You have few upkeep costs. Every partner is considered as participating in the operation. Every partner's personal assets can be used to repay liabilities of the partnership. But there's unlimited liability. So you also have that liability. If John is sued for malpractice, the partners are also sued. So it's a dangerous thing. Limited partnerships, this type of partnership has at least one general partner. The general partner takes on the unlimited liability. So that's usually the stuff you see in hedge funds. In a hedge fund, there's a general. The general basically is the guy who gets paid, but also takes the risk. The limited liability partnership is similar to general partnerships where multiple partners are each responsible for the operations. However, in LLPs, they are not personally responsible for the action of other partners or the debts of the business. Unfortunately, not all businesses can be LLPs. The type of businesses is often restricted to certain professions such as lawyers or accountants. So an LLP can be done as a partnership with professionals, and you can limit your liability between different professionals. And the government has effectively created that because there are a lot of medical practices, legal practices, accounting practices that need those issues, that need that protection, that veil, that umbrella. Limited liability company, one of the most flexible types of businesses. The LLC combines aspects of both partnerships and corporations. You retain the tax benefits of the sole proprietorship, but you have the limited liability of a corporation. So as long as the LLC chooses not to be treated as a C Corp, it retains flow-through taxation status. So you go from sole proprietorship, you got the partnership, the S Corp, and the C Corp. You benefit from limited liability. In an LLC, the companies exist as its own legal entity. You're protected from liability. So there's an S Corp or a C Corp, and the C Corp does not flow through. That gets treated like a small corporation. The S Corp goes right in. It's like a family owned. There are regulations, and before you set one up, you should definitely either, you can go online and do it, but know the implications. The most important thing is your liability is limited to anything that's, again, not criminal. Again, not criminal. So just keep that. The only reason why I make a big issue out of that is that, I'm talking in the mic. I don't know who I'm talking to, but I'm sure you're very intelligent people. But I just want you to be aware of, if you get involved in something like this with somebody else or whatever, you always have to be aware of where you have liability. And then finally, you have the corporation, which is the thing we see most often. It's separate legal entities created by shareholders. Incorporating a business protects owners from being personally liable for the company's debts. A corporation is more complicated to create as compared to other types of businesses. Articles of incorporation must be drafted, which include information such as the number of shares to be issued, the name and location of the businesses, and the purpose of the business. In sole proprietorships and partnerships, if one of the owners passes away or declares bankruptcy, the company is dissolved. There are three kinds of corporations: a C Corp, which is the regular corporation that you see most often, and shareholders are part of that. There's the S Corp. It's similar to a C Corp, but you can only have 100 shareholders. They're passed through entities like partnerships, so it's not passed twice, usually family-owned businesses. And then you have your nonprofits. Okay. So I will take this, right? And I'm going to take this, and I'm going to stick it in your discussion. So you have that. So you have it in your discussion. And this is the main topic in the first week. This is your main topic. So just for those of you, and you're doing a great job, by the way. That's what it looks like. And you can contact me either through the messages, or if you have something really important, then just text me 917-613-9725. You have that number. It's my number. Use this class. Tell me that you're from that class. I teach in other places. Here's more forms of businesses. SCORM. I love that. SCORM. I still don't know what that means, but it's SCORM. All right. So you got service industries have revenue from service expenses. Merchandising industries have revenue from sales and cost of goods sold. Manufacturing industries have revenue from sales. So this is service, like a law firm again, or a medical firm. Merchandising, you have a court, you buy things and resell them, or you merchandise, you're really merchandising, or you make things and sell them. And the balance sheet differences is service industry, you're not sold, but you provide a service. In merchandising industry, you have inventory. In manufacturing industry, first you start with raw materials, then you create the product, and then you move on. Okay. Any questions on that? Oh, there's no questions. There's nobody here. Okay. So just so you know what the business differences are. Okay. I'm just wondering why I'm not seeing more on this SCORM thing. Okay. And then on the business differences and accounting assumptions, these assumptions are: every business must be expressed in terms of money and can be included in the economic accounting records of an economic entity. This assumption requires that business events such as the purchase of supplies or equipment be recorded in the company's books or a general ledger, having a value in dollars and cents. So you gotta use dollars and cents. You cannot use, if you're using a foreign currency, and I teach a lot of international finance, it's got to be translated. Economic entity assumption requires that the activities of a business entity be kept separate and distinct from the businesses of the owner. The assumption means that even if an individual or a group of individuals opens a business, then the records and transactions of business are kept separately from the person. So personal and business have to be kept separate. You can't just dip in, move back and forth into your business. You can get a lot of trouble for that. Time period assumption. Economic life of business can be divided into artificial time periods. These time periods include, but are not limited to, a monthly, quarterly, or annual report. This assumption allows a company to prepare financial statements for a period shorter than a year. Most companies have a process they call month-end closing. So you have to have a period where you close your books every year. And then you have to assume that you're going to be a going concern. It's assumed that the owners will operate the business for an indefinite period of time, as long as the business is profitable, and not a definite period of time like 6 months or 2 years. The owners plan to go into business and stay in business as long as it's profitable. If profitability is the owner's criteria for liquidating the business, this condition could happen anytime or could never happen. So they intend to operate the business on an ongoing basis. You have to recognize revenue when they come in. You can't recognize revenue later or sooner. You have to recognize it when it's in. If it's delayed, you have to also deal with that. You have to follow GAAP rules. It's very important that you recognize the proper income at the proper time. You don't overstate, you don't understate. Why? Because you have to give the users of your data, the users of your financial statements, a fair and accurate record of what you're doing. You cannot just turn around and obviously make up periods. Matching principle. You have to match you have to match revenues with their concurrent expenses. So what's an example? Well, let's say I paid for insurance for a year, prepaid insurance, but I started doing that in July, for 6 months. Well, if I, at the end of the fiscal year, if that's when at the calendar year, if that's when I close my books, I only have 6 months worth of income. I can only charge up 6 months worth of insurance. Even if it makes me look better for whatever reason to have more expenses, you can't do it. It's against the law. It's not GAAP. You have to match everything by using accruals, and we'll talk more about that. You have to disclose everything that happens that you think can affect the firm, and you have to account for things at their cost. Okay, not at any other price, but what their true costs are. What are constraints? Materiality addresses the impact of an economic event that has on firm's overall financial conditions. So materiality is determined by whether or not the inclusion or omission have an impact. So do you have to do you have to mention everything? I mean, let's say you're running Coca-Cola. Let's say you're chairman of Coca-Cola, and somebody walks in your office and says, "Hey, guess what? We took $50 out of petty cash to buy Betty down the hall a birthday cake, and we lost the money. We didn't buy, we had to take another $50 to buy her a cake. Somebody just lost the $50 when they walked down. It's legitimate. I'm making this up. Is that material? Does Coca-Cola need to disclose that in their financial statements? I don't think an accountant is going to walk in and shut down Coca-Cola for a $50 bill. Probably the CEO will just put in his pocket and say replace. Who knows? But it's not material, obviously. Coca-Cola is a multi-billion-dollar company. $50 is not really material. You don't have to really. I would, again, maybe they decide to disclose it. Betty's $50. I doubt it, right? But if Coca-Cola has $100 million liability because somebody's suing them, that needs to be disclosed. That can't be hidden. That could be a criminal problem. Because remember, because of Sarbanes-Oxley, the CEO and the CFO is criminally responsible. They're legally responsible. Conservatism means that when in doubt on how to handle an economic event, always choose the method that would be least likely to overstate income. Okay. So basically, that is what you need to do. Module 1 activity. Consider 3 well-known companies. What are the similarities? What are the differences? So I would suggest going to a site that I find you can, if you have a brokerage account, that's great. Use your brokerage account. I don't care. But because they have a lot of information nowadays at Fidelity and places like that. But if you don't, Yahoo Finance is just lights out. It really is. Southwest Airlines, I happen to know from trading, is a symbol as love. And you can get so much information here. News, financials. Look at this. News, financials, everything you need is here. Just make sure that you use it. And if you have any questions, you know where to reach me. But I just want to wrap it up because we're talking about all of the different, we're talking about all of the different counting principles. Here's my advice from a lifetime of life. Okay, I'm assuming most of you are younger than me. Don't do anything you wouldn't want your grandmother to see in the newspaper the next day. That's the best rule, not just in business, but in life. Are things going to happen? Well, it could happen, yeah. The higher level you go, things can happen. Sometimes it's not even that you were looking for a problem, but a problem you created, you were in the middle of creating a problem. Well, if that's the case, then your best advice is just speak to and again, this is accounting. So I'm going to sound a little dramatic, but speak to an attorney and then fess up, because waiting for it to get better is not going to happen. But the best advice is don't get involved to begin with. In most cases, if something does not sound right. And if it doesn't sound right, then just don't do it. Just don't do it. Just say no. If the consequences are bankruptcy, well, bankruptcy is a lot better than getting yourself into trouble. That's usually what happens. Most people are not born criminals. But most people get involved with bad accounting do it because they just make a bad choice, and they think about consequences like, oh boy, I'm going to go out of business, or this is going to happen, or I'm going to afford my mortgage. But you know what? All those things will happen. But it's a lot worse if you step into it. So that's my best advice. Just follow the rules. Don't and pay the IRS. Always just don't ever cheat the IRS. This doesn't pay. It just makes no sense. Part of what I do here is teach it. A lot of stuff you may be able to teach yourself, but what I'm supposed to do is clarify, teach, help, and then give you my benefit of my own personal experience, which I have a lot of. So that's basically it for today. I'm sorry about the Saturday, but we're going to be doing this more during the week. Please watch the video and let me know that you like it. And snow mitts. Have a good one.